Hey everybody, welcome to Mortgage Today for Tuesday, February 6th, 2024. And oh, what a day it was. UMBS were up 9 basis points in early trading. Global bond market steadied after the biggest two-day sell-off in months while stocks looked for direction amid mixed earnings. Investors continue to fret over the timeline for interest rate cuts while the Fed continues to point to recent strong economic data that could delay or postpone the use of rate cuts. Minneapolis Fed President Neel Kashkari wrote an essay on monetary policy. In it, he discusses how tight monetary policy currently is and how to measure that tightness. He addresses the argument that monetary policy is getting tighter because the Fed funds rate is stable in the context of falling inflation. And if inflation has fallen by 3% over the past year, that implies that the real Fed fund rate has increased by about 3.6%. He believes that is one way to look at the issue. However, he prefers to look at the 10-year yield TIPS, or the inflation-protected securities. Under this model, real rates have risen by about 60 basis points. Since the economy has remained so resilient, he considers whether monetary policy is as tight as the first model suggests. The implication of this is that I believe it gives the FOMC time to assess upcoming economic data before starting to lower Fed funds rate with less risk to the tight monetary policy is going to derail the economic recovery. This is one vote for a higher for longer outlook. Whereas the bond market had obvious individual motivations for all phases of the sharp sell-off over the previous 2 business days, today's rally was far more mysterious. To be sure, a 7 basis point rally in 10-year treasuries doesn't need any subsequent fundamental justification if it follows hard on the heels of an almost 30 basis point sell-off. To be sure, a 7 basis point rally in 10-year Treasury doesn't need any substantive fundamental justification if it follows hard on the heels of an almost 30 basis point sell-off, but it's always nice to keep track of what matters. In this case, it may be the seller exhaustion and 2024's technical ceiling matters more than fundamentals. We also noted correlation between geopolitical headlines and the sharpest leg of today's rally, but remain unsatisfied in the logic required to connect those dots. Satisfaction aside, we'll take the rally and hope to see validation in Wednesday's 10-year Treasury auction. UMBS closed the day up 25 basis points at 101.02, which puts us just right above that 50-day moving average. So at least it gets us back in this ever-narrowing range between the 25 and 50-day moving average. We still have to contend with that really bold Fibonacci line right there. So hopefully we can break back above it. But in terms of things you can control, check out our sponsor at wellthatmakessense.com. This is a post from the great book, No Excuses by Brian Tracy, which will help you have a way better, more profitable year. Most people think success comes from good luck or enormous talent, but many successful people achieve their accomplishments in a simpler way, through self-discipline. No Excuses shows you how you can achieve success in all 3 major areas of your life.